From The Times and The Sunday Times, this is The Story. I'm Luke Jones.
I would describe student loans like a tumour. You need to nip them in the bud before they get too big, but no one's able to do that. And then they just grow and grow and grow until they're this horrible looming thing over you.
Big, cumbersome student loans are back in the headlines, and with it, angry graduates.
I've actually just logged in to my student finance account, and it's now 52,000 in 9 years. So that's great.
My debt currently stands at just over £55,000.
My loan is now over £62,000. So
but my debt now stands at just over £75,000. I'm currently
owe £79,766.75, and the debt continues.
Many are chasing ballooning debts, and their repayments are being outstripped by the interest.
I can honestly say that I was 18 and I had just finished school and I wasn't looking at interest rates.
We were sold the student loan system on the basis of, don't worry, you only need to pay it back if you don't earn enough, but there was never any consideration of what if you do earn enough for it to make a significant dent in your salary, but very little dent in the loan itself.
They're paying more than any student generation before, and later this spring, it's about to get a bit more expensive.
It's rubbish that it doesn't affect your mortgage.
It does disincentivise me to increase my salary more, and my marginal tax rate is now 51%.
Student loans have a massive impact on my security, my ability to save to buy a home and to put down roots.
The governments over the last decades have repeatedly chosen to protect older generations from the costs of ageing and retirement, whilst ignoring the financial burden on those starting out in their careers.
Our essay question: how has this happened? Why has this happened? And to what extent is it fair? 20 marks, and we will show our working. The story today: an almighty student debt reckoning has arrived.
I'm interested in student loans, or was first interested in student loans, because I myself actually have a student loan.
This is Mary Downer, a money reporter here at The Times, who's been investigating student loans over the past few months.
But it's something that really affects our generation in their 20s and 30s. And as a money reporter, I wanted to kind of engage those readers with the problems that actually affect their paychecks.
So are you hearing a lot of noises off from friends and students maybe older and younger than you about this?
Yeah, absolutely. I mean, that's actually where the idea originally came from, kind of sitting at the pub with friends and them saying, you know, I've paid back £400 a month and I'm still seeing my main amount of my loan go up, the principal of my loan go up. And I just thought there's definitely a money story in this, so I decided to investigate.
Who knew a pub moan could be so useful?
Yeah.
So the type of loan that people have who are particularly concerned about, it's all to do with when you went to university. So there's one group that is particularly worse off. Who are they and what's their situation?
Yeah, so we're mainly talking about graduates who went to university from 2012 to 2023. And these were the first students who started after tuition fees were hiked up to £9,000 under the coalition government. And this also came with a new loan type, which is called this Plan 2 loan. And unlike the students and graduates who came before them, their loans are hit with an interest rate, which is the retail price index, which is a measure of inflation, plus 3 additional percentage points on top of this. So the more that you earn, the higher your interest rate goes. So it's kind of the inverse of a normal commercial loan in that sense.
Let's go through some of the gripes that people have with that. The first one is just the higher amount. It's £9,000 a year that they're paying instead of £3,000 as opposed to the cohort who started before 2012. The second is that rate of inflation, RPI. Why is that so troublesome for people?
So RPI generally runs about 1 percentage point higher than CPI, which is the Consumer Price Index. Now, CPI is the official statistic that we use, and RPI hasn't actually been used since 2013, when the ONS, the Office for National Statistics, said that it was too inaccurate compared to international standards. So RPI isn't used for things like uprating benefits or the state pension, but it is used for student loans.
I see. So you're annoyed that the amount of the loan is higher, the rate of inflation that's being charged on it is higher than might be charged on something else. What are the other gripes with these Plan 2 loans?
So because the tuition fees are higher, your debt upon graduation is far higher, obviously. The average debt is £53,000, but that just continues to grow because of the use of RPI, but mainly this additional 3 percentage points which are put on top. So for every pound you earn above the threshold at which you start to repay, which is about £28,000, your interest increases. So once you hit about £50,000, the interest is being added at 6.2% at the moment. So 3 percentage points higher than RPI, which is 3.2%.
Okay, so higher loan, the higher rate of interest, another 3% whacked on top of that because why not? You mentioned the threshold there. There is a threshold at which if you're earning, £20,000 as a graduate, you're not repaying that at all. What's happening with your loan?
Yeah, so there are some really good parts of the system, such as this threshold and the fact that you don't repay while you're earning below the threshold, i.e. if you were to lose your job, you wouldn't be burdened by repayments. But when the system was brought in, a key protection was that this repayment threshold was going to rise with earnings and inflation, which means that you're only repaying once your education is paying dividends to your career. However, subsequent governments keep freezing this threshold. Most recently, Rachel Reeves in November, who said that it will be frozen from April this year for 3 years, which essentially means that the lowest earning graduates will be paying about £250 more a year towards their loan by 2030. So it's really hitting those lower earners. And actually, when George Osborne did a similar freeze in 2016, many people who are now in government, such as Angela Rayner and Wes Streeting, all criticised it for the fact it would be punishing lower earners the most.
One more thing I just want to lay out about the basics of this, though, is that this isn't necessarily a debt that will follow you well into the grave and beyond. There is a point at which it just vanishes.
Yeah, absolutely. And that's, again, another really good part of the system, in the sense that after 30 years, everything is wiped, whether you've got £1 left or £1,000 left or 10,000. That is for those who are on this Plan 2 loan. Current students who will be graduating this year and those who are still at university and about to go to university, theirs will be wiped after 40 years.
Got you. So, we've got all of these gripes, some good things, but a lot of unhappy graduates about it, maybe yourself included. Who have you been talking to who's in that situation?
So I've spoken to many graduates who all are facing very similar circumstances, but one in particularly was Patrick, whose case really just exemplifies why these issues matter. So, Patrick, can you introduce yourself? So your name, where you're from, what you do?
So my name's Patrick Bartin, and I live in Glasgow. But I grew up in England, and I work for an energy company in the regulatory sort of field.
And tell us about him. Why did he go to university? Where did he go?
So he went to university in Glasgow. He studied Central and European Studies,
which I thought was really interesting, and definitely did help me think critically and gave me sort of skills that have made me sort of more analytical.
Because he is from England, he paid full whack tuition fees, because if you are Scottish, you don't actually pay tuition fees, or the government pays them for you. And he went to university like many, many young people, for the same reasons that many, many young people do.
My school and the sort of environment I was in definitely gave us the impression that we had to go to university. Like, it was otherwise you sort of were failing at life. But also that, to get a decent job, you need to go to university.
And it just seemed like a sort of essential next step.
And what year did he go?
So he went in 2013. So he was the second year of these higher tuition fees.
And what did he know about these loans back in 2013?
He said that he was kind of just told that these loans are the best money you'll ever borrow.
We'd had an information evening, and we had been told that it was the best value loan you'd ever get, that we'd barely ever notice the repayments, because you'd have to earn a certain amount, obviously, to pay it back, and that the payment would be so low that, you'd barely feel it.
The thing that I keep hearing is that people were told it was going to be like a phone bill each month, the amount that would be taken from their paycheck. However, not many phone bills of £300 or £400.
So you're doing something wrong if it is.
Yeah, and I think this is why it's now sort of become such a conversation, because at the start of your career, it might be £30 or £40 because of the way that it's kind of income contingent. It's 9% of your salary above the threshold of 28,000. But now that these graduates are sort of in their 30s and getting more into the prime of their career, their salaries are higher. So they're really seeing hundreds of pounds a month.
Explain his finances for us. I mean, what happened with his debt and his earnings? How did it shake down for him?
So he originally borrowed £42,000. That's for his tuition fees and maintenance loan as well.
And so obviously it's gone up by £30,000, I guess, approximately.
It's almost doubled, essentially.
I would say it's, almost as good as doubled. And if you look at the next few years, unless I get a really significant pay rise or something changes, my debt's only going to go up to more than double, way more than double, and I'll never be able to pay it off.
Since he graduated, his debt has grown to £72,000, even though he's been making repayments pretty consistently. He did also do a postgraduate degree, and that was in law. So that was kind of crucial to what he works in now. He works in regulation, so he does feel like that was a good sort of investment in the career that he's got from it. But last year he paid about £3,000 towards his debt, but he saw the debt increase by £5,000.
And just for clarity, I mean, I earn about half what an MP earns, right? So I'm certainly not in the top whatever percent of the country. I think it's a decent wage, it's a good wage, but it's not like I'm earning crazy money to be paying that much money a year, £3,000 a year. I definitely noticed that.
Wow. And is that the case for lots of people, that the repayments that they're making aren't keeping pace with the amount that the debt is growing?
Yeah, that's the case for 2/3 of people. So I did an FOI back in December, and we found that, about 66% of people who are making repayments are seeing their debt increase.
And what is that in terms of cash overall?
Last year, £15.2 billion was added to these loans in interest, while only £5 billion was repaid.
And the difficult thing for someone like Patrick is he might know people who are just a little bit older than him and were under the old, cheaper fee structure.
Yeah, so he actually has a sister who's a couple of years older.
So my sister is 2 years older than me. And whilst she also has a student loan, it's not going to impact her life quite as dramatically as mine. Over my life, I'm going to pay probably more than I'm going to pay towards my mortgage.
I've also spoken to people who missed their grades in 2011, missing out on their university place for that year. So having to start in 2012 and having tens of thousands of pounds more debt than they would have.
Is an expensive mistake. How has all of this affected Patrick?
So one of the main ways that he is sort of begrudged by the impact is the impact on his mortgage affordability. So a really crucial part of these loans, which again is a strong point, is that they don't affect your credit score in the way that a traditional loan would. However, hundreds of pounds a month being taken from your paycheck, of course, is going to implicate your affordability, and quite rightly, because we don't want people taking on mortgages they can't afford. But Patrick found that his buying power was drastically reduced. And this is there's sort of a double-edged sword here, because you're also much less able to save for your deposit if you're losing £300 a month.
Savings and investments, that's just not really an option for me because of how much we're losing every month. And if you imagine what you could do if you were investing £300 a month, that could be really invested, somewhere.
And kind of on top of that, the 10% of students who come from the wealthiest families don't have loans in the first place. They're also more likely to have help on a housing deposit. So there's a sort of intra-generational gap here. It's a sort of another side of the bank of mum and dad, which is making people feel pretty squeezed.
And they're about to feel more squeezed, as you touched on a little bit earlier on. Rachel Reeves made an announcement about changes are afoot. Just explain exactly what that is and how that might affect people.
So in the autumn budget last November, Rachel Reeves did sort of slip in this threshold freeze for Plan 2 student loans. Of course, we know that income tax thresholds can be frozen, and they indeed have, and there's lots of coverage about the fiscal drag implications of this. And it's essentially the same thing when you freeze a student loan repayment threshold. It's quite technical, so I think that's why it's a sort of beneficial way for her to present it, because it's just
It's hard to fit on a placard.
Exactly, very hard to fit on a placard. And it's going to sort of generate about £5.6 billion extra onto the Treasury's books. And as I mentioned earlier, lowest earning graduates are going to be the most affected by this.
But just so we're clear, the rate at which you would start paying your loan is frozen, but obviously average salaries are generally, and have been for years, slowly rising, although actually not that much. So more people are going to be dragged into making those repayments. Is that the only downside of it?
Yeah, so more people will be dragged into making the repayments, but it is also a freeze on those thresholds at which the additional 3 percentage points of interest is added. The threshold for this additional full 3% is being frozen at £52,855 starting in April. So people are going to be hit with higher interest rates sooner because of this freeze. And that's all the way up to the upper threshold because it functions as a taper. So if you're earning £40,000, your interest will be higher because of this freeze.
What is Rachel Reeves' reasoning of this? How has she defended or sold this?
So she defended it as fair and proportionate.
The truth is, to be able to bring down NHS waiting lists, and NHS waiting lists fell by their greatest amount, I think in 15 years last month, that does require putting money in. So my job is to get the balance right between tax and spending, and I do believe that those measures are fair and proportionate.
Now, these student loans are indeed loans. They weren't sold as a tax and they didn't pass through government as a tax. But that does sound like sort of general taxation, the way that she's presenting the terms there.
And that is one of the sort of gripes that I've heard in the last week or so. People saying, you sold as a financial product and now you're monkeying about with the terms and conditions. And you wouldn't necessarily be able to do that with another financial product.
Yeah, absolutely. I've spoken to lots of kind of financial advisors and people who work in banking and loans, and they've said, you know, the student loans company who administer these loans for the government, they're not regulated by the Financial Conduct Authority like any other commercial lender would be. And so they are sort of above the law in that sense. I mean, granted, many commercial loans wouldn't be able to write off your debt after 30 years or stop the repayments if you became unemployed, but they kind of can get off scot-free by making these changes.
And I have to ask the Minister how on earth he thinks it could be possibly justified or justifiable for people who've signed up to a higher education student finance package to see the terms and conditions changed either during their course or after they're graduated.
And with all this going on, what does your man Patrick think about it?
He's angry and he feels like the social contract's really been broken.
I get quite angry because it feels like it was totally missold to us. It feels like they keep changing the goalposts to make it harder and harder. And by freezing the threshold, one time too many, she's broken the camel's back. And now we're sort of collapsed and screaming.
And many of the graduates I've spoken to are feeling this intergenerational kind of unfairness.
There's only so much you can shove onto the future and all the young people, right, before there's a breaking point. Because what do they think is going to happen if people can't afford to have children? You know, if you combine it with the cost of housing, all the other sort of cost of living things that we're paying for, all the other things that we've been sort of handed to us, it just feels like a complete misjustice that our parents' generation would do this. And this sort of the social contract, like what sort of country does this to their future, to their young people?
Mary, rewind for us. We're talking about student loans. There was, of course, a time back in the mists of time where it was all free. It's milk and honey. Walk into university, here's a degree.
Yeah, so until 1998, tuition was free. And it was then in 1998 that it was put up to £1,000. But this was means tested. It then, from 1998, has progressed pretty rapidly. By 2006, it was put up to £3,000. And then in 2012, we saw that it was £9,000.
And all of this at the same time happened with quite a push to get people going into university.
Yeah, absolutely. So back in 1992, the Further and Higher Education Act saw 33 polytechnic colleges, which provide more vocational training, turned into universities so that there would be more spots. And this was kind of a precursor to Tony Blair's target for 50% of young adults going into higher education within the next century.
Today, I set a target of 50% of young adults going into higher education in the next century.
And I mean, given that that was only sort of 27 years ago, we've already actually hit that target far before, a whole century. So, now over 50% of young people do go to higher education.
So more people, more expensive fees, now up to £9,000. Remind us exactly the circumstances under which that happened in 2012. And is this all Nick Clegg's fault?
Well, I think Nick Clegg, he, campaigned on this idea that there wouldn't be a hike in tuition fees, and then got himself into a rather sticky spot when he found himself in coalition with a party that wanted to hike them.
There's no easy way to say this. We made a pledge, we didn't stick to it, and for that I am sorry. When you've made a mistake, you should apologise.
What was happening in government at the time, and I've spoken to a couple of people who were sort of advisors in the room during this period, was that the electorate had voted quite clearly for a cut in spending. They said that they felt pressured for this austerity that they thought the people were calling for, yet many things have been put off the table, for example, pensions. So they had to look at the areas which they could tweak around with. And higher education was one of those things. And something that they did, which I think is particularly illustrative of the way that they designed the system in a sort of moment of panic for austerity, was that because these loans have a 30-year life, when they first brought them in 2012, they put them off the books, essentially meaning that they wouldn't show up in the national accounts until they expired after 30 years. A few years later, the ONS flagged this and said, look, this is crackers. Yeah, this is a little bit fiddly. So they are now on the national accounts, but it did save them a lot of money. And at the same time, they cut teaching grants. So the amount that the state was putting into higher education was vastly reduced.
Two things. Someone listening to this might say, well, if you're enjoying an education, you should pay for it. And actually, £3,000 fees weren't necessarily, in lots of cases, covering the cost of that tuition. And secondly, we are still in a situation where the government is paying for a lot of these because so many of these loans are just never going to be repaid. So even though the debt's hanging over you for years and growing and you're maybe just nibbling away at it, you might never actually have to pay the full, whatever it was, £75,000 that Patrick's currently is.
Yeah, and many people won't end up repaying these full loans, but I think a crucial part of that is the fact that it was sold as a loan rather than a 30-year tax. So that's one point that many graduates are feeling frustrated by. The other thing is that although the government are still obviously funding higher education, in some years, they've actually made a profit from these loans because of the interest rates. So at the end of 2021, because of borrowing costs, the government could have expected to earn a total profit of $3.2 billion on student loans for the 2023 entry cohort, those people who started university in 2023. So, you know, there's positives and negatives. And I think that 30 years is a very long time to be paying 9% more tax on everything you earn above that threshold.
And the people who are joining in 2023 aren't actually even necessarily on that troublesome Plan 2 loan scheme that you mentioned a little bit earlier on. There's been tinkering along the way.
Yes.
To what extent?
So 2023 was the first year of this Plan 5
Plan
loan
5?
term. Yeah.
We won't trouble you with Plans 3 and 4.
Yeah, they're not the most catchy names. But Plan 5 is just based on RPI. The interest is just RPI without
no
that
extra 3%.
No extra 3%. But the loan term is 40 years. So if you join university in 2023, you could be repaying that until you're in your 50s or 60s.
Oh, wow, okay. Of course, there are lots of angry students about this, as you've explained, for a variety of reasons. Have you picked up in any of your reporting and in any of the recent groundswell of chatter about this issue, any interest from the political classes? Because, of course, they're the ones who might have to change it.
It's very interesting because these loans were brought in under a coalition government and the original report that designed the loans was commissioned by a Labour government and obviously Tony Blair's pledge back in the 90s. Kind of every major party is implicated in this.
Oh, yeah.
So with that comes sort of a lot of nerve about coming out and talking about it, but also a lot of archival quotes where people are, you know, talking about it while they were in the shadow cabinet. Now that they're in power, it's a little bit more difficult to explain their thoughts. So the main ones I would say was Wes Streeting. So when these loans were brought in, or shortly before these loans were brought in, he was the president of the National Union of Students. And he was really, really vocal against tuition fees being hiked.
Well, later this year, some university vice-chancellors want to use a government tuition fee review to actually double the level of fees that we have in Britain, which I think is absolutely outrageous given that fees were only trebled in 2006 and we've seen no real improvements to the student experience.
Another is Angela Rayner. She's mentioned in 2017 that the freeze on a threshold is going to affect lower earners the most.
We know that it will mean an increased debt burden on our students, and we know that it will make it more difficult for those from low-income backgrounds to attend top universities.
The other day, Lucy Powell, who's the deputy leader of the Labour Party, said that the interest rates on the loans were egregious and unfair.
There are aspects of it that are egregious, absolutely. But I can't promise that means action would be taken in the near term.
So there is a lot of discussion, particularly in the Labour Party, actually.
But also discussion about discussion. Is anyone actually having discussions about what might need to change and how?
So there's been sort of a month now of discussions about why the system's unfair. But a really important part of that is looking at, okay, so what can we do instead? And we recently launched the Sunday Times campaign to reform the student loan system. And what we're calling for is 3 relatively easy changes that would make the terms much more palatable for graduates and young workers. Firstly, to move the interest rate from RPI to CPI, which is what the government uses already on, pensions, benefits, all these other things. To remove that additional 3 percentage points so that people aren't being hit with higher interest rates the more they're succeeding in their career. We're also asking the government to turn around the freeze on the repayment threshold and to introduce a lifetime cap on the interest that's added onto your loan. Because at the moment, some surgeons I've spoken to are expecting to repay double what they originally borrowed. And that's an NHS key worker.
We need them.
We need them. And because he had to borrow so much to do so many years of training, he actually has to earn £93,000 before his repayments will be more than the interest being added.
Does he earn £93,000 or more?
He does not, no.
But your point is, do all of that not just for new joiners and new people taking out loans, but backdated.
Yeah, do it retrospectively, at least in part. And there is good precedent for doing this. I've recently compared our system to other countries which have a similar economy and higher education system to us in terms of the universities they have. And there's been reckonings with student loans in lots of countries, and lots of governments have responded. So a great example is in Australia. There was an uproar about how high the interest rates were getting a couple of years ago. And Anthony Albanese's Labour government introduced a sort of reverse triple lock. Well, it's actually a reverse double lock, I suppose. But so in the
These are the kind of jokes you all have on the money desk.
So yeah, we obviously here we have the triple lock, which protects state pensions by going up by the highest of the inflation measures. And in Australia, they protect their graduates by having a double lock, which essentially means that the interest rates on the loans are either the lowest of CPI or wage growth. So there are ways that people can, make this system more fair. And they did that retrospectively and credited the graduates back onto their accounts.
It is going to be a lot of money though, isn't it? Either way you slice it.
Yeah, it's going to cost money for sure. And think tanks are still working on the exact modelling of the cost. What's really difficult, as you can probably gather, these loans are just incredibly complicated. And that's before you get to the way that the accounting is done around these loans, because it's all sort of theoretical money. It's all 30 years away. You also don't know what a graduate's lifetime earnings are going to be. That massively impacts how much they're going to repay in total. So there's so many levers to pull. But I think the headline figures shouldn't be taken as a pure cost, because they're also an investment. England has the lowest amount of funding in higher education from the government out of any country in the OECD, proportionately per student. And, private investment does mean we have very high quality universities, but I think putting the entire burden and more onto the graduates is just unsustainable at the moment.
And are you picking up a kind of shift in how people who recently went to university or maybe are thinking of going to university look at the prospect? Because on top of all what we've discussed here and the cost of it, you've got graduate unemployment isn't particularly good. You've got the kind of salaries that graduates can expect to go on are not particularly good. So the contract and the expectation is changing, isn't it?
That's kind of why this conversation is being picked up so much, is you've got headwinds from every direction. And it's one thing to be having 9% more tax for, a real tangible benefit. And there is still a benefit to higher education. Massively, your lifetime earnings are increased. But many young people are feeling that with the cost of rent, with the difficulties to get on the housing ladder, the cost of childcare particularly, all of these things coming together are just unsustainable for what is going to be our main tax base. Patrick says he, of course, doesn't regret it, but he does have friends who are making more money than him without going to university.
Because I do have a lot of really great friends from university. I had a really great experience at university. I love the concept of university. In terms of regrets, I don't really know, but I do definitely regret having not understood what the financial impacts of going to university meant. I definitely think I could have had a equal career having gone for different angles. Whether that was I know someone that did an apprenticeship who earns more than double what I earn now and pays nothing towards their non-existent student loan.
Is this a lot of noise that we're seeing about this issue that will go away at some point, or are we at a turning point?
I think we might be at a turning point. We had a recent survey this week which showed that 85% of graduates would vote for a party that promised reform on student loans. Obviously, promising it and fulfilling that promise are two very different things. The Labour government actually said 3 years ago that graduates would pay less under their leadership. But I think that as these graduates get older, not only are their repayments going to get bigger, they're also going to be trying to reach financial goals such as buying a house, potentially starting a family, having a bit more financial security. And anything that's preventing them from doing that is just going to become a larger frustration.
That was Mary Downer, a money reporter for The Times. Today's producer was Sophie McNulty, and the executive producer was Taryn Siegel, with sound design and theme composition by Mal Lassetto. I'm Luke Jones. See you soon.